brand. I don't have any brands. All right, everybody. Sorry about that. My fault, as usual. It's the nut behind the wheel. I don't think the word is accidentally, but I hit end stream because I was trying to bring Brent on and get his audio working, and I screwed up. So I apologize for that. We should be live now here and live on Twitter. And I've sent the links out to Brent, Busy Brands, and a couple other people if they want to join. And let me go to comments. Sorry about that, guys. It's always the idiot behind the wheel. You know, I can complain. I went to the bank the other day and I was under stress. So Brent has to sign in, but he will. Let me see if there's any messages. Brent has to sign in again. Let me just check if my emails went out. He was just here. It worked perfectly. I just hope I didn't screw it up further. Let me just see. Sent emails. I hope everyone's doing well. Nick Jeff is the first one. Yeah, you might have been the first one before, and then I hung up. Let me see if Brent, let me just text Brent. There he is. He's so good. Brent is so good.
Oh,
all right. There we go. You're so talented, Brent.
It took me 10 minutes to get back through, Bill. I'm not sure if that's a
I'm such an idiot. I'm such an idiot. All right, so we have 2 minutes. You're live, but you can talk. We can talk.
How are you?
I'm good. Hey, Busy, if you're listening, one gentleman just said the space isn't live. Did I do something wrong with that? I set it up for 5:55. Anyway, Busy, I leave the space side to your capable hands. I'm good. You seem in a good mood, Brent.
Yes, I am. I'm quite happy. Bear with me. Just spilled something and cleaning it up. Yes, I am. As a matter of fact, I am very happy.
The Bear Stearns trading desk behind you?
No, I think that's the AT&T data center. That was a background I found online, and it seemed kind of cool. So, yeah, because otherwise you guys would be seeing my son's playroom behind us, which is cool, but maybe not so cool for this.
That would be fun. Okay, let's see. I have an eye operation on. Yeah, I think I screwed up the spaces.
I think you have to add the spaces link on this one to
I did add it, but you know what? Hey, Busy, what do I do? I added Twitter on as a destination. So Busy, Busy has his going. How do I do it, Busy? How do I turn my space on? Let me see. Maybe I just go to spaces. So Brent, while I'm trying to do that, let me just see. Maybe I have to create a new spaces, or I'd have to.
You may have the old link, the one that we were just on.
Yeah.
On the other one.
You should still go to the same one. So busy. You can call me. I can mute it, or you can just. I don't know what to do. So Brent, I want to, because I can't think of how to get it going. So I'm going to have to rely on busy.
Okay.
Let me ask you something, Brent, just before we start, just so that everyone here knows where we stand. All right, here's busy. Let me listen to him. I won't do it on speaker. Hello? 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 Hello?
Please leave your message.
It's a nightmare. All right. How many shares are outstanding?
13.5 million.
13.5 million. And of that, how much is the float, do you think?
3.6.
And of that, how much is closely held?
Oh, probably 2.1, 2.2.
Okay. Is
Yeah.
closely held. Okay. 2.1 plus. Hey, busy. What do I do to get it on Spaces? Oh, I have to turn it on. How do I do that? Okay. All right. I'll do that right now. I don't know how to turn it on though, but let me see. Okay. I go to me. See details. Start now. Okay. All right. I guess it started now. Busy. All right. I'll just put that under here. Anyway, all right. So there's 13.5
million.
Why is that noise coming? I guess I have to mute. My mic is off. I don't like that music. All right, Busy's going on there to fix it. Busy, turn that music off. Busy, what is that music? The bells, the bells, the bells. All right. Autoplay. That's Journey. Okay, unmute and make him co-host. How do I make you co-host? Just push. How do I make? Oh, here requests. Busy. I don't know how to make you co-host. Invite co-host. Busy. Send co-host invite. Yes, I want to invite him. Okay. All right. I hope that all works. So Brent.
Yes.
That means there's maybe a million four.
Yeah, there's probably about 1.4 million floating around.
1.4 million. So I want to ask you one thing here.
It sounds kind of ominous.
No. I don't mean it to be ominous.
I know. I'm teasing you.
I do wonder, according to this letter, on December 4th, 2022, the Mentor Group gave to Aubrey SPAC it was a long document, but this is the first page of it.
Yep.
They were here to provide an independent valuation service. And on the last paragraph, Aubrey will acquire 100% of the outstanding shares for $114 million.
Yes.
The next page, on the bottom sentence, blah, blah, blah. Based on the foregoing, it is the Mentor Group's opinion that the merger is fair from a financial point of view. So my question is, did something happen over the year that Aubrey SPAC was working with you and the time that Aubrey SPAC started trading earlier, and then somebody started trading CAUD shares some crack research team saw that the stock shouldn't be valued at what the mentor group said, and it collapsed. Did something change? Did Aubrey learn something in the last week that caused a different valuation? Who is this? Anyway, I'll leave it at that.
No, I'm yeah, I can go over all that. We're live, yes?
Yeah, we're live. We're live.
Okay, cool. All right. Wow. Okay. I just clicked on comments. Welcome everybody. Sure. Yeah. Why don't you
rephrase that?
Okay.
Rephrase
so let's reset. So Aubrey is the SPAC. They went public 3 years ago as a shell with the express purpose of acquiring a business and providing capital to that business.
Right.
One of the unfortunate realities of SPACs this past couple of years is that the money that is in trust, meaning the money that they raised on the IPO that should go to the target company, the trend this past couple of years has been that those shareholders that put funds in, they can do what's called redeem. So when they put it out for vote at the end of the whole process, when the Securities and Exchange Commission says, okay, you guys can merge, the target company goes into the NASDAQ shell, and the money is used to fund their operations and growth. So when it goes out for vote, one can only vote in favor of the merger, okay, by keeping his or her money in the trust. Okay. Voting against it means you redeem. You take your money back, you give up your shares. So this past couple of years, those redemptions have averaged between 90 to 100%. So that means that those target companies launch on the NASDAQ with little to nothing. You know, they'll raise money in a pipe, kind of like what we did. And then if the incoming business is interesting enough to new investors, then they'll come in and they'll, you know, in the old days, the SPAC prices would go up. It hasn't really been the case this past year unless these redemptions are really high. So if you have 99% redemptions, what that means is that all the money goes away. Okay. But all the shares come back and you've got this tiny float. And so what the other trend that's been occurring this past, call it 6 months, is that these tiny floats get squeezed. So what we're talking about is the classic small investors versus these big institutions. Okay. And it can work very well, and it's very enabling for the target company. So we were kind of banking on that happening because we were hoping that we'd get huge redemptions, which we did. So when you showed that chart, do you mind going back to the chart again?
Yeah, I can, just 2 clicks away. Hang on.
Okay.
And it's the one I used last week.
Okay. All right.
It comes from Small Cap Investing, who I encourage everyone to follow on Twitter at Small Cap Investing. Okay,
beautiful. Okay. All right. So if you look at that flat line on there.
Yeah, this is the $10 to $11.
That's right. That is how SPACs trade because there's nothing in there except for the cash. Okay. All right. When you see that spike, that increase in volume,
$38 or something.
Yes, and it traded up to $38. The reason why is because we had 99% redemptions. We only had 61,000 shares left in the float.
Okay.
And so retail investors bid that up because they were trying to create a short squeeze. Awesome. You want that. And that has been very enabling for SPAC targets because then they can raise money to launch rather than launch with nothing. You know, getting to NASDAQ is awesome. I'm thrilled about it, but getting to NASDAQ and not having any money is a tough place to be. But for us, what happened is it traded up to 38. It closed at 27. And unfortunately, NASDAQ halted it because the continued listing department saw that we had 61,000 shares in the float, and you have to have 500,000. So left hand was not communicating with right hand. NASDAQ continued listing, said, oh, you guys don't qualify anymore, meaning Aubrey. New listing said, but wait, there are going to be 3.8 million shares in the float at $10. That's an implied valuation of $30+ million. So they qualify. But we were halted during that time. Now, the part that is a little questionable is when we reopened after everything was approved, we traded straight down. And there's a debate right now as to whether it was the PIPE investors, which are two hedge funds, Polar Asset Management out of Toronto and Kepos out of New York. Could they have shorted it? Could it have been Meteora who also looked at it? Could it be just professional short sellers? Look, SPACs will trade down too. Some of them trade up on the short squeeze and they settle back to at least 50% of the run, and the companies are funded and all's good. But there's a vast majority that trade down too. We kind of got stuck in a real bad position where we traded down to $1.40. We had shares in escrow for those hedge funds. And if the share price traded through 350, then they could take those escrow shares. So where do those escrow shares come from? Well, there were 1.5 million shares, which belonged to my team, meaning my colleagues who've been working for basically nothing for over a year because we haven't been able to raise any funding. So everyone worked on deferred comp. People who have invested directly into Logic as bridge investors to keep the business alive because we couldn't raise any institutional funding. So I asked them to escrow their shares because that was at the insistence of the PIPE investors to protect their investment. So it is possible. I'm sure that there is a very great argument that they shorted it down through that price so they could exercise it and take the escrow shares, which they did. So all those shares are now gone. So unfortunately, it did play out. And I think that one would look at it and say, okay, you've got two hedge funds that have the power to sell against their position that is to be delivered within settlement date. If they sell it down far enough against that, then they can trigger the escrow shares. And then when they receive the escrow shares, everything pairs off and they make 3-5x on their investment. Part of me says, oh, that would be great if we actually had access to that $5 million that we raised. But unfortunately, all of that money went to cover closing costs, which were Aubrey's lawyers and their banker and their D&O insurance and a number of other things, including their transfer agent, which came out to $5.5 million. We had $5.6 million in total. So we launched on NASDAQ with $100,000. So it was a real.
Isn't it malpractice on their part not to raise enough money so that you can be a viable entity? 6 million, 7 million?
Yeah, it's I don't want to get into the weeds here, but
all right.
What I would tell you is this, Bill. People who I know who are shareholders or friends and colleagues who have looked at everything and put it all together and taken a real objective look, have a clear view. I was hoping to not delve into a real negative.
Okay, we don't have to.
No, it's okay. I mean, look, I just want to be clear here. There could be something very sinister at work. If you look at the way the share price traded after the de-SPAC and then all the way down to $1.40, it feels that way. But there's not a lot I can do about it right now. However, I think I think what's interesting, and you know, let's use hindsight here. When we talked last Sunday, and in the audience here today listened to what we were talking about. There, and by the way, everybody, thank you. That was awesome. Monday, I think there was real clear participation. I think we traded nicely during the week. But I think also those of you who are seasoned traders could see that the $2 level and the $2.25 level appear to be a real troublesome spot. Now, what could that be? Well, you get marginability at 2. It used to be 5, but I know that a lot of people can margin at 2. I think that that's a technical trigger at both. I think that if you look at how it traded, I believe it was Thursday when it traded up to 220 on strength, and then within 20 minutes it traded down to $1.85. That move, if you're a hedge fund and you short it at 220 all the way down to $1.85, you can overwhelm the small buyers just by sheer size and power. And then all you have to do is cover between $1.85 and call it $1.95. And you've just made, forgive me, call it 220 minus 1.85, 35 cents divided by 2.20. You had a move of roughly 16% down. I mean, who wouldn't want to make 16% in a day? And even if you make half of that, you only make 8% on your trade. Awesome. You do that. You do half of that a day, every day on 100 stocks. I mean, I mentioned this last time. You're making some real return, and it's absolutely done. So again, it may not be a sum one. It's a sum thing. It's, computer generated trading, but there are people behind that. And how do you overwhelm that? Well, this existed back when Citadel and others were trying to crush GameStop and Bed Bath & Beyond and AMC. But what happened? Individual investors took the upper hand and said, we're not going to put up with this. You're not going to run us over. And just by sheer strength and fortitude, people came out and ran them over. Right? Yes, I would love that to happen. And no, I'm not saying that in an empty way. I bought shares and filed a few weeks ago. I can't say that I'm about to buy shares again, but when I do, I'll file. But
if you do.
Well, no, I absolutely would. I can say this. One thing that's occurred since I was on last Sunday that I had indicated people should look for is a change in senior management beginning to happen. As of last Thursday, I am no longer officially CEO. So stay tuned. We'll have someone who has taken the helm, someone I like, trust, and respect very much, and have known for 30 years. And he's been a critical part of the ad tech and MarTech industry. He knows other people in the industry who are some of the most well-known and recognized names in that industry. And so why is that important? They may not be household names, but when you set out to build something, you want to put together a collective of people who have shaped an industry. And they've said, yeah, I want to be part of that. I want to join the board of advisors. I want to join the board of directors. I want to introduce companies that I'm part of or that I like to you as customers or strategic partners or JV partners or acquisition candidates. That starts to happen in the environment that we're in and that we're about to come out of is one that's ripe with privately held companies that have not been readily able to access venture capital funds, who want to be part of something greater. And there are even publicly traded companies on foreign markets that trade at low valuations. You start putting these together and you have a tailwind behind you if you are an industry executive who has helped shape the vision and overall strategy of said industry. And something really great happens. And as the IPO market starts to heat up and as people start to say, wow, these things shouldn't be trading at these low valuations. They should trade at valuations that spur on their growth and their acquisition strategy. Then next thing you know, you're back to where you were in late 2020, and you've got companies that trade at very healthy valuations, thereby enabling them to continue on their path. So I think if you have the right person to lead that, and he or she brings in others who are clearly industry experts, unequivocally, then great things happen. And I think from the shareholder perspective, when you see that start to map out, then you're in for a good ride. And I think what's very interesting is the way we traded last week. We kept trading up to 225. We bounce off of that. I'm sorry, 220. We bounce off of that. And we trade down. But if you look at it, it really feels like clear news in terms of direction are going to really guide how shareholders say, all right, I want to be part of this too. And they add to it. The one thing that I would leave you all with before we take questions is that when you see press releases, try to navigate through the jargon and the buzzwords, but pay close attention to the overall messaging. Within these releases, I think what is going to become evident is that there is a blueprint for the near term, intermediate term, and the future. And you don't have to understand the jargon and the buzzwords. All you have to understand is that there is a clear directive, and that the people who will come in and be part of that have helped shape this industry. And this industry is a multi-billion-dollar industry. It's an industry that has propelled Amazon and eBay and even the bricks and mortar companies like Target and Walmart to sell more things because they advertise online. And so ad tech is not going away. Ad tech's here to stay, but you'll see a reshaping of that, and it'll be from the people who help shape that from the beginning.
I want to quickly show what the independent advisors used. They used all these companies. I'm not going to bore everybody, but look at these comparable public companies. And there's 2 pages of them. There's the other page. Then they came up with the mentor group, long experience and reputation, agreed. I already read what they said, agreed with the price. But here, Aubrey determined the value had a range of 122 million to 144 million based on a 1.7 to 2x on projected revenues. So the valuation that everyone worked on was real. I want to ask you a second question, and I don't have an overlay, but I printed it out. But anyway, you announced for the second quarter on August 25 that here it says right here, generated by Data Logic Business. I should have done the overlay. You expected to leave 2023 on a annualized revenue run rate of 70 million. Obviously, that might have been delayed a little bit. This year, I don't think is as important. What I'm trying to ask is, what do you think 2024's exit annualized revenue run rate could be?
That's a good question. In my answer, Bill, is not meant to be coy. Although I would say it can be almost anything that we want it to be, providing that we have good liquidity and valuation in the market. Because what's available organic's kind of a buzzword. What's available to us with our existing business from a customer and partnership basis, now that we're on NASDAQ, is significant. What's available from an acquisition perspective of acquiring a company that is profitable and that we can acquire at a valuation that makes us earnings positive So the word is accretive. So if we make an accretive acquisition at a very attractive valuation, it can be almost anything we want. Could we roll up enough companies that are a strategic fit so that by the end of the year we have $1 billion in revenues next year and we're profitable by 100 million? We could. A lot of it depends on where we are stock wise, because you don't want to make all these acquisitions at $2 a share. You want to make a couple of key ones early on. You want investors to cheer and say, yeah, that makes sense. I get it. And then you trade up to 5 and you make a couple more. Then you trade to 10. I mean, there's plenty of, when I use the word blueprint, the blueprint for doing this successfully is demonstrating to investors that you know what you're doing in terms of growing the business on a customer level, a strategic partner level, and on an acquisition level. And although this may sound a little funny, I'm not the guy to do that. That's why I wanted to step down as CEO, because I'm not an ad tech guy. I know quite a few people in ad tech now, but can I go and talk to them about the direction of the market, trends within, things that are happening that we should be cognizant of and try to adapt to or evolve into or actually lead? No, because I'm not. That's not my background. My background is more in finance and financial engineering. But I think that when investors see that there's clear leadership that has a background in that, and that leadership has brought people on also within that realm, then it starts to make sense. And when they start to talk about it, then the message starts to gel.
Well, I'll finish my 2 points that I was leading you to, or me to. If you take the 114 million valuation agreed earlier, or just take 70 million in annualized revenue and multiply it by 2, you get, in the first case, dividing it by 13.5 million shares. In the first case, you get $8.44. The second case, you get $10.37. And those are static numbers. One number was calculated a year ago. One is based on this year's annualized revenue projection. So looking forward, and let me just finish my little questions with this. Well, I do have one question. Who is Chardon? But you don't have to answer it now. Look over here. Look over here. Two parts of my question. One is, why do people want to merge with the Data Logic AI platform? And 2, clearly, you or your team have abilities. You got Rebel AI, Fixel AI, Fixel Israel, Battle Bridge Acquisitions, Push Interactive, Tambling, all to join. And I assume you're going to be able to attract, and it gains momentum, even more companies under your new CEO. So it's, I guess, I don't know, that's an open-ended. Why do they want to come to you? And how come you guys have such skill attracting them? And then if you want, you can talk about this green box Chardon.
Oh, that's Aubrey's investment bank. They raised the money from the PIPE investors. I won't comment here.
Okay, leave that.
Yeah. But actually, that's a great point though, William. I think that from a valuation perspective, the Securities and Exchange Commission cleared us at a valuation which would represent $10 a share, or 114 million in share issuance. Whether or not you stay there, clearly we didn't. But does that valuation pencil out? I think so. But again, I think if you want to be forward looking and say, okay, where are these guys going? Where are they going to take this? I'd say pay attention to who comes in and what his or her vision is and where they want to take this, because you can take it really anywhere you want to. You can either completely screw it up and take it nowhere, or you can take advantage of the fact that this is an environment that's target rich, You can acquire things. You can bring on new customers and partners and really build and create something if you have people around you who understand the industry. You can do that in any industry. This is the one that we're in. So, when you see the announcement, okay, look, let's be clear. The market's not open. We're announcing tomorrow morning at 8:30. So yeah, there's a new CEO coming in. He's a dear friend. He's awesome. He has plans that I think are going to really, really set the industry on fire, because the people that he's brought in to talk about joining us in various aspects. It's
Am I allowed
incredible.
to add his name?
Well, he's on the board. He's on the board of Logic. We announced that last year. Yeah, that's him.
This is an old news story. So
yeah, I think a lot of people won't be surprised. And
but he's the managing partner and founder of Trajectory Investors. He is a venture investor focused on disruptive innovation in artificial intelligence, big data, fintech, cybersecurity, digital media and advertising, and blockchain technology. He has led investments in multiple disruptive companies, including Triple Lift, a global ad tech platform, Think Real Time, which was acquired by Dealer.com, the first machine learning RTB platform, whatever RTB is, real estate maybe, for advertising,
real-time bidding,
which was acquired by Airbnb. He's a co-founder and managing partner of TrueVest, next generation impact real estate investment development and technology. He's CEO and board member of Trajectory Alpha. He's an active angel investor and entrepreneur. He's ranked in the top 100 most influential angel investors in the United States and on social media. Do you think he'll bring investors? I'll leave it there. It goes on. There's more to it.
I think he's going to do a phenomenal job. And more importantly, it's not a single person that's going to be leading this, because he's actually been working together with me during the SPAC process for the past 11 months. And I think what we're going to see very quickly are names that, again, they're not going to be household names, but doing any digging, very good. Yes.
Elizabeth DeMars, tremendous track record.
Yeah, you're going to see more of that. And when you put a collective of people together who have helped define an industry, then chances are, look, there's no guarantees anywhere, but the chances are of creating something successful and transformative, I think, are quite high. And would one want to take a bet at $2 a share on something that has a valuation that was pegged at 10? Probably. And can a team that has been in this industry since its inception and will bring in others who are key players in that industry, can they take that valuation higher? I think so. I think there's a really, really great opportunity right now for them to do that. And, I'm not going anywhere. I'll be on the board. I'll be doing all that fun, roll up the sleeve stuff on an operational level. But I think Pete's going to do a tremendous job.
Well, you're going to attract success. You're going to be the Dodgers of ad tech and MarTech space.
Hope so.
I don't know
okay.
how many questions are here. I didn't look. You can see some of the questions, and I don't know if Busy wants to ask any. I can ask more, but I think we should open it up.
Let's take some questions. Oh, by the way, I'll get Peter on with us hopefully next Sunday.
Yeah, I'm just looking at the questions I preset. Is Jeffrey Tierman still involved in the company?
Jeff is the head of Aubrey. He has board. He's not on the board, but he has
A representative.
Yeah.
Okay. You distributed, or they distributed 33% of the earned CAUD shares, which was approximately just under 3.8 million. The remaining, I guess there's 14% and to somebody, I guess to Aubrey. 53% is still coming to us. Is that in 11 months or is that sooner?
When we complete the acquisitions, I would say you'll see that happening.
In the document, it said if you need more money, and I didn't print it out, so I can't remember exactly who it said, but I believe it said Aubrey or Chardron or somebody, but it said if you need money, they have the exclusive right to provide the new money. Is that true? And is there other sort of plain vanilla funding coming in the near horizon, if you can talk about it?
Sure. Okay. So, to the good, being on NASDAQ is vastly different than being on OTC. I'm finding out real time just how different, because from a corporate governance and compliance perspective, it's been a lot more strict, which is a good thing. I think from investors, that's what they want to see. They want to see that it's a very strict compliance and governance oriented platform, which it is. The other thing is, from a funding perspective, you hopefully no longer have to go to these predatory structured funds, who call themselves family offices. Aubrey has the first right of refusal. So if we get a term sheet from someone, we can show it to Jeff and his team, and they can say, yeah, we'll take that. We'll do the same terms. Or they'll say no and let the other firm take it. The important part is that, Jeff was head of Everest Capital back when there were, a dozen hedge funds. He was one of the early big hedge fund investors back in the 80s and 90s. And is currently CEO of one of the largest sporting goods companies in Europe. So, having someone who has a background in that, who can decipher things in term sheets and documents that some of us can't, is a good thing. And they can provide the capital if needed, or they can participate. So that's good.
So they can't come in with worse terms than what you
no
with
yeah
friendly investor. That's good.
Yeah.
Do you think there's funding on the near horizon?
I've had a number of offers to fund us. Surprisingly, no toxic funds have come in to us. I guess my reputation is preceding me right now, in that I'm not open to that. And even some of our shareholders have asked me if we're interested in convertible or PIPE funding on good terms, which is nice. I mean, I like the support we've gotten. Not deviating away from the topic, but I think it's important for shareholders to understand that individual investors' roles have changed significantly over the years. I mean, I remember when you and I got into the business, it was fax machines. That was the thing, right? But you couldn't talk to investors on a mobile phone if you had one. All the communications had to come through the firm. I mean, everything has changed tremendously. But individual investors back when I was at Bear Stearns, they didn't have access to anything. If you wanted to do research, it's like you go to the library. There was no online. Institutions were accessing information, maybe not in real time, but certainly the next day or 2 days later. They can call the company. They can pull filings. They can access Edgar. Individual investors never could. Over the years, that's changed tremendously. And what's really been inspiring to me has been in the past 3 years that you've seen the evolution of social media and the power of the individual investor to crush the predatory maneuvering of Wall Street. I mean, I started on Wall Street. To me personally, I'm out of Wall Street, but on my way out, I'm actually a big fan of burning bridges. I don't need any friends in investment banking or the hedge fund world. That's not a thing.
The guy wants the answer. It's Peter Board's.
Okay, cool.
Tomorrow.
Yes, Devin. Yeah, Pete's pretty amazing. Yeah. Anyway, my point is that as an individual investor, it is now in your hands alongside other individual investors to really dominate the playing field. It is no longer the Citadels and the SPAC capital. I'm probably like dating myself. Anyway, I think a lot of these hedge funds now that specialize
in TV Cohen, right?
Yeah. But anyway, there are a number of them that call it 5 years ago just dominated the market, but I don't think that's the case anymore. I think when individuals make up their mind that they are going to enable a company to execute on its business plan by way of a higher share price and not letting short sellers crush them and kill their ability to try and succeed. I think that's phenomenal. To me, that's been the most inspiring advent over the past 30 years, is that individual investors now have the opportunity to really help shape the future for small companies.
Do you think I'm shifting a little bit to the companies that I know you had, rumored to have 2, 3, 4 companies ready to merge in. You announced it that you were going to do this sort of contemporaneously with the DSPAC. I know prices are lower now, but to me, that I think it's fraud. Others think it's just algorithmic selling. Whatever it is, I think it's an aberration, and the value is there in outside analysis. It was there for a year. It's there looking forward. Do you think, one, do you have companies still willing to roll into you? And two, do you think they'll go ahead and do it quickly, even if they have to accept a higher price than $2 a share?
We've got, all right, let's say we've had upwards of 90 candidates. I don't want to steal
90?
Yes.
Wow.
Yeah, it's a big pipeline because there's a lot out there, and we spend a lot of time on it. I don't want to steal Peter Bordis's thunder, but he has a real plan here. I mean, my original. All right, let's put it this way. I think another important lesson in life is to know that you have to put your ego aside sometimes and admit that maybe your own direction may not be the best direction. I think some of the acquisitions that I had lined up may not have been the best ones, but I think if you hive off the parts that weren't and you keep the ones that were, and then you see crossover on ones that Peter and his incoming team and others will have, I think that's there's plenty out there. I'm certainly just ready to be pointed in the direction of going to structure and finalize these. So there's plenty out there, and you don't need that many. You need a handful of accretive acquisitions, but again,
They'll have
not for.
cash, they'll have revenues, they'll have high margins.
Well, yeah, yes, but I think more importantly, it's you don't just say, okay, wow, this company's doing $110 million in revenues and 30 million in gross profits, and with capital, could they double or triple every year? It's not just that. I mean, that's great. It's absolutely great, but you also have to look at, okay, will this company drive into the future and mean something? Will it actually have an impact? And will it not be, irrelevant in a year? Because there's that too. Revenue is revenue, profit's profit, but strategic value is something completely different. I mean, everyone has seen, successful companies disappear. Motorola, gosh, that was one of my favorites. Polaroid, Eastman Kodak. I mean, look at all the PC makers. I mean, there's been BlackBerry. I mean, there are so many companies that if we at that point in time said, wow, this is the future, and then it wasn't, and then it was gone, you have to really have to have your fingers on the pulse of the industry. And I don't. You can wind me up and say, all right, go in this direction, close that deal. Awesome. I like that stuff. But trying to figure out which ones really matter, I'm not the best at that. But yeah, we can do that.
So if there are some that he has lined up, I'll stop asking you directly. They could occur quickly or maybe in the near future, first quarter, whatever. How do investors and institutional investors factor that into their investment decision? Do they discount that good news now, or do they wait until that's finalized? Or are they going to give credit to Peter Boards for his ability to get it done?
We'll see tomorrow. Look, it's going to come. It's going to come in stages, and you can take the approach of, okay, I believe this is going to happen, I'm going in now, or you can say, all right, I'll wait and see. Waiting and seeing is okay too. But it's like a roadmap. If you're heading to a certain destination, how many points along the way do you need to see before you realize you're on your way? But this is investing; it's a little different. I would say that things are going to be very thoughtful. You're not going to see a lot of, oh, hey, this is what we plan on doing. I think it's going to be more, this is where we intend to go. Pay attention to what we announce and who comes on and what comes on. And as you start to see it, as your confidence starts to build, then you can choose to participate. Because all of us have been in the situation where we want to believe something, and we do, and we throw a bunch of money into it, and then it doesn't pan out for this reason or that. But I think in this instance, it's going to become evident very quickly.
Are you still going to be the sort of trade desk for the 50% of the market who is not covered by trade desk?
That's still, that's still very much of an area that we'll be active in. I think there are some other trends underway that, to people who don't understand the industry, I hear about this and I look at it and I nod my head and go, okay, I think that makes sense. But what you see is, you can actually see these things happening really quickly. And that's exciting. You don't have to wait 6 months or a year to see things start to pan out. You can wait 15, 30, 45 days, 60 days and see something starting to happen. It's like, wow, okay, that trend is definitely underway. And you add to your position. It's cool. It really is.
Let's see if there's any questions. I wonder if some of those acquisitions will lessen your need to raise money at all. But anyway, that's probably for That's probably for Peter to talk about.
Yeah, look, capital is the lifeblood of a lot of companies. I remember, in fact, it was during early 2021. There was a company that went public on NASDAQ. And for the life of me, I forget the name and ticker, but I had this in a PowerPoint that I used to show my team, and they went public and they had a goal to go from 600 million, which was their market cap, to over 10 billion in a combination of acquisition and a bit of fundraising. And they were so aggressive. And it was mind boggling. I was so impressed at the speed that they progressed, that they built their market cap. They rewarded shareholders, Bill. They acquired at fair prices, and they raised money and deployed it in thoughtful and smart ways. And at the end of, I think it was like 14 or 15 months, they had a market cap of $16 billion.
Wow.
And I thought, gosh, who didn't win here? Everybody won. Shareholders won. Their partners won. Their management team and colleagues and families won. And all of the acquisitions they made, it was insane. I'll send it to you later. I just have to dig it out. But it's absolutely doable. I mean, over 34 years of being in the market, I've seen it numerous times where if a company has a real well thought out vision and strategy and they execute on it, and they always bear in mind that they are going to reward shareholders and partners and acquisition candidates and their team along the way, you're generally going to win. So, I tend to side on that. So, I've kind of left out that whole discussion about, predatory financing and short selling and everything, because I think if people focus on the good, and that a management team has the ability to do it, and they have the power of the retail investors behind them, you can achieve anything.
I'm heartened by your comments on the NASDAQ and all of the more strict compliance, I guess would be a word. On the other hand, a lot of the people listening, if they are still listening, we've experienced some absolute predatory slaughter on the NASDAQ as well, and people looking the other way. I mean, I wonder what you think about high frequency trading, which essentially turns the market caps into contracts of pork bellies or orange juice. I mean, does this really help companies and shareholders raise money, raise capital? Anyway, that's a philosophical question we don't have to get into.
But it's a good one. I think it cuts both ways. There's everything boils down to the old adage of fear versus greed. Right. And it's just human emotion. When we are the most afraid to take action and invest, it's generally the best time to invest. And when we are feeling the most buoyant about something, that's usually your sign to be exiting.
Warren Buffett had a great saying, you probably know it, but he said, if it's good enough to screenshot, in other words, your account's gone up in value, it's a good enough time to sell.
Yes.
I wish I had learned that. You get all excited? Wow.
Yeah. Look, what I would leave everyone with is this. There's going to be clear direction. There's going to be a very well thought out process of what we're doing.
Cost to borrow.
Wow.
309%. Busy Brands just sent this to me. Cost to borrow.
That's expensive, right?
That's expensive.
Okay.
Particularly, I don't think that's annualized, or maybe it is.
Look, again, I'm not going to sit here and say that I champion any, in any type of bad behavior. I mean, privately, when I start talking about my feelings about short selling or, companies, public companies that get victimized by these funds. It's a little scary. But what I can say is this: again, the power of this lies in the hands of retail investors. We as individuals, whether you've got $100, you have $1,000, or $10,000 or $100,000 in a speculative portfolio, you can make a difference. And it's been proven time and time again. And these big giants who totally screw over small investors and smaller companies, they pay the piper. They do. But it takes a unified effort. It takes a real unity of effort from small investors to say, you know what, not this time. And the company has to be supportive of that. They have to champion that. They have to say, I will, if you support me as a company and you push our market cap up and we run over these shorts, will I deliver for you? And if they do, yeah, you've got a real winning combination.
Yeah. Well, let me look at comments. I mean, the shorts join in when they have to cover their positions.
They do. And you can turn the tide. Look, could we be at 5? Could we be at 10? Could we be at 15, 20, 50? Sure. In theory, yes. The big question is if we do that, will we do something to justify it? Yes. And I think that's really what investors need to know.
Devin, I don't know what the short interest is because I looked it up and it doesn't, it's a NASDAQ stock, so it doesn't show up. But we just went over the float is very small. It's not even 1.5 million shares. There was volume, however you want to describe it, of 25 to 30 million sold over the last few weeks. I don't know. You can argue it's delivered and it's covered. I don't know. But that's a lot of flipping of 1 million shares.
Yeah, it is. Anyway, well, good. It's time for me to go to have dinner with my family. Okay. Thank you all. Thank you very much.
Well, let's we're here. We'll get better and better, but we're here to interview Peter in a thoughtful.
Okay. Yeah, let's get him on here next weekend if we can. Tomorrow 8:30 pre-open. We'll announce it. Again, I know that there's a lot of jargon and buzzwords and stuff in some of these press releases, and I'll be the first to admit it's a lot of it's gibberish. But what's important is the message behind it. Right. Are you going to go somewhere? And is that somewhere going to be a place that is going to reward investors? Yes. And so, take the time, read through. If you don't understand it, that's okay, because I don't as well. But, you will get a feel for does this team and those who join them going forward, do they know what they're doing? And have they been in this industry, and have they helped shape this industry? And as you start to see that, you're going to come to the conclusion of, I want to be part of that, or no, I don't. And so I think it'll be real clear real soon.
Well, I think it's terrific that you spent your Sunday evening with us, and we're going to support you. I will.
Thank you. Thank you, Bill. And thanks everyone else. This is tremendous to me.
And your new team we'll fully support.
Great. Awesome.
Okay. So good night. Thanks.
Good night, Bill. Thank
you.
Bye.